Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. First one of the week here on Monday, and we are quickly wrapping up the month of July here on to August. We are going to be going by Friday here. Friday will be the first week, so I will have a video out of the stocks I'm looking to buy as we enter into August. So look out for that one. But today we're going to look at Prologis. This is a REIT out of the real estate sector. Now, before we get too far in the video, if you can do me a big favor and hit all the buttons down below, thumbs up, make sure you're subscribed, click the subscribe button, join us on this journey to financial freedom, join the Vested Interest community, click the notification bell. There is a thanks button down there for anyone who might want to buy me a cup of tea and help the channel financially that way. Drop a comment, let me know what you think, share with anyone you think that might find value, and watch time is another one of the YouTube algorithm metrics that YouTube looks at to spread the video. So if you could watch the videos to the end, I would appreciate that. This is the vested interest stock screener. This is the criteria we will be going through. It is a REIT, so we will not be looking at price to book. So it's got to meet 5 of 8. If it was a company out of the financial sector, like a bank or an insurance company, we would add in price to book, with 1 being fair value. All right, check this company out at their homepage, www.prologis.com. That's www.prologis.com. That is their homepage where I pulled this information from. And I didn't pull much information because it's pretty straightforward what this company is. Again, they are a REIT celebrating 40 years. I think they started back in 1983 of excellence in logistics real estate. And that's their bread and butter. They will help you lease. They will help you build out, develop real estate for logistics companies. So think like Amazon, and again, you'd have to go to their homepage and see who their customers are, but companies like Amazon that have a lot of logistics, they're shipping stuff, right? They're the big plants, or not plants, but they're the big warehouses that materials are stored before they are shipped out to the public. Again, that's www.prologis.com. Now, we are looking at Prologis Incorporated, ticker PLD, and the reason we are taking a look at them, down 2.84% on the day. You'll have to forgive some of the background noise. I am out in my garage. Can you hear that? That's a little bit of thunder. We're having a heck of a thunderstorm right now, so bear with me here. But they did close out the day down 2.84%, which is why we're looking at them. $107.16, 52-week range, as low as $85.35. as high as $132.57. Now, they are closer to their 52-week low than their 52-week high, but they need to drop to $98.15 or below to be within 15% of a 52-week high. Market cap of $99.432 billion, a beta of 1.25, so they are more volatile than the overall market, 1 being the market. PE ratio, price to earnings here is at $26.72. Not a great metric for REITs. You want to look at funds from operations, right? So if you have the ability to go look at funds from operations for this company, you want to look at that. Earnings per share, EPS at $4.01 per share. Earnings date, July 16th, 2025. So we are past that. You might want to go check that out if you are interested in this company. For dividend, $4.04 with a yield of 3.66%. They are a quarterly payer, I believe. So you want to look at that, or you can wait till the end of the video. I will show you that. You can divide by 4. So it would be $1.01, but we'll see that here towards the end. Ex-dividend date, June 17th, so we are past that as well. They did pay out June 30th, so you would be in line for the next dividend if you were to buy them now, but you're going to have to wait a few months since they just paid out at the end of last month. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, not affiliated with Yahoo Finance, $118.75. So they see some upside from here, but not getting back to its 52-week high, and not really even close, right? What is that? 28, 30 something, or 20 something and some change. 20 would be 38, so not quite 20 and some change. 18, 14 and some change. 10, 28. Yeah, $14 and some change there off of their 52-week high, if they were to get back up to that, according to Yahoo Finance, at $118.75. Now, jumping over to the right, I'd like to look at dividend yield theory to see if the company is potentially undervalued. It is a way to quickly check. It is not the end-all, be-all, but it doesn't require any math. All you do is look at their 5-year dividend yield average. Again, this is called dividend yield theory. And the theory is that a company will eventually revert back to its mean, right? Whether it's overvalued or undervalued, it would revert back to its mean. So you look at their 5-year dividend yield average, 2.57%. Compare it to its current 3.66%. Over here, 3.66%. Since it is higher than their 5-year average, that actually speaks to undervaluation. These numbers are inversely correlated. If this number was lower than their 5-year average, that would be overvalued. But this one at least according to dividend yield theory, is potentially undervalued right now. Payout ratio seems elevated at 97.01%. I like under 75%, but not for REITs and real estate necessarily, right? I'd love it if they were, but most companies in this sector, REITs and real estate, they have to pay out over 90% for tax purposes, right? They get some tax rebates and some tax reductions if they pay out over 90%. We went over the ex-dividend date, dropping down to free cash flow. I want growing free cash flow over time, so going back here to December 2022, 4.1 billion, 2023, 5.3 billion. So you're seeing growth there. 2024 back down to 4.9, trailing 12 months at 5. So it looks like we had a downturn in 2024. So they're not going to get growing free cash flow on this one. They are not pulling any shares out of the market, have not done so since at least 2022 or 2021. You could go back further if you check out Yahoo Finance. They go back a couple more years. Or you could pay for the service and go back even further. Now, jumping over to stockanalysis.com, this is another source I go to for information. I am not affiliated with Yahoo Finance. I am not affiliated with Stock Analysis. These are just two sources that I go to for information. I do recommend that you pick 2, if not 3 sources, so you can make sure the information you are looking at is accurate and up to date. They have 19 analysts that have taken a look at this. They call it a consensus buy. It's right there on the edge of a hold and a buy. And if you were to go to their webpage, you'd be able to see how many might call it a strong sell, a hold, a buy, or a strong buy. They're leaning towards a buy. Low estimate of $100. That currently sits 6.67% lower than the 107.15. Average estimate of $121.12. Pretty close to what we saw with Yahoo Finance in the previous page. That would represent a 13.04% increase. And if it happened to hit their high of $140, that would be a 30.66% increase. And you could collect that 3.66% dividend yield along the way. Now, jumping into some of their statistics, I like to look at return on capital employed here, ROCE, and I like 10% or better here, and they're only at 4.06, so they wouldn't get a check for that one. And EPS growth, I like 5% or better forecasted over the next 5 years. They're at 2.17%. Revenue growth is forecasted at 4.9. This is more of a deep dive, but I do like to snip it there and show it here anyway. All right, looking at their dividend history, quarterly pay, as we mentioned. Now they're saying the payout ratio is 106. Yahoo Finance had it around 98, so a little bit of a discrepancy there. That's why I recommend a third source. But either way, it is a little elevated. But again, that's not really that concerning for REITs or business development companies, because a lot of those type of companies, they issue shares to help pay out their dividends. So that's why you also, it's not uncommon to see buyback yield in negative, which it is negative 0.21%. So that means they're issuing more shares than they're buying back, though it's pretty close. Now, dividend growth is 7.65%, so they are growing the dividend, high single-digit number there. 11 years of growth, shareholder yield is positive 3.53%. We want that positive, and like I said, we want buyback yield to be positive for most companies, but not necessarily an issue for REITs and real estate. Now, they do pay out on the same schedule as most companies, March, June, September, December. Going back here to December 2022, 79 cents, raised it up March 16, 2023 to 87 cents. Raised it up again March 15, 2024 to 96 cents. Raised it up again March 2025 to $1.01. So I would anticipate if they're going to maintain this dividend growth, it will be March of 2026 before you see the next one. But that, again, 7.65% dividend growth is nice. All right, let's run them through the screener here. And apologies if I'm running through this one a little quicker than I normally do. I'm actually worried about losing power here, so I'm trying to get through this. Understand the business, yes. Again, they are a REIT out of the real estate sector. They lease and would help you develop the space, whether it's a building that's already built or building you a building on an empty lot, and then lease you out that building primarily for companies in the logistics sector. So think, like I said, an Amazon or a company that needs to store and ship out a lot of products online. Mostly everything's online nowadays, or at least they have a... There you go. You hear that? Lightning and thunder. It's a heck of a storm here, actually. Growing free cash flow? No. They had the one down here. Growing dividend? Yes. Above 7%. Dividend payout ratio is above 75%. But again, not necessarily an issue for REITs, business development companies, companies like closed-end funds, that sort of thing. Dividend yield theory says they're potentially undervalued. So check there. They are not quite within 15% of a 52-week low. They need to drop to $98 and some change or lower. Return on capital was not over 10%, and earnings per share growth was not over 5%. So we're really only looking at 3 out of 8. It doesn't quite make it onto my watch list. I don't know that they'll get to the 75% or less, but if they could get to growing free cash flow over 4 years, if they could bring up their return on capital employed, or wait for them to fall within 15% of a 52-week low and bring up their earnings per share. But they need to do a little bit of work to make it onto my watch list. Let me know what you think of Prologis in the comment section below. Is it one you're watching? Is it one you're buying? Is it one you maybe were selling today? And if so, why? Let me know in the comment section below. Now, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the best interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Prologis you'd like me to add to the rotation and work it in on a day that it pulls back, let me know in the comment section and I'll try to get it a video. And I do primarily do, or really exclusively do, dividend growth stocks. So make sure it pays a dividend. Some of you out there have asked me about stocks that don't pay a dividend. Apologies, but we focus on dividend growth stocks on this channel, so I won't be doing non-dividend payers. But if they start paying a dividend, we'll definitely add it to the list. All right, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week and stay dry out there. If you're in Michigan, it is really coming down, at least where I'm at right now. Heck of a storm. Hope you're all doing well. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and invest journey for educational and entertainment purposes. Investing involves risk. You can. There's money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor. For those of you who made it to the end, really do appreciate it. Thank you to all the subscribers and viewers of the channel. The channel continues to grow because of people like you.